The stock market plunged this morning when it opened after President Trump yesterday announcing some sweeping tariff on foreign goods. So what are the impacts going to be? What will we feel? What will the economy feel when it comes to these tariffs that are now in effect, went into effect at midnight after Trump signed them yesterday in a ceremony at the Rose Garden? Well, earlier today, just a little bit ago, actually, I spoke with Francisco Sanchez. He's the former U.S. Undersecretary of Commerce for Trade. We talked about the impact of these tariffs.
Garrett, first of all, it's good to be with you, and it is sweeping. This is the biggest change to trade policy, and I'd say international economic policy, in probably 100 years for the United States. So it is sweeping. It is very significant.
We saw this morning when the stock market opened up, it really took a dive. I would imagine that response to this does not surprise you.
Well, it doesn't. One of the things that business looks for after making money is certainty. And this creates a lot of uncertainty in the business community, particularly manufacturing companies that have international supply chains. So yeah, it did not surprise me because of the uncertainty that a lot of businesses are going to face, certainly at least in the short term.
So what happens now for many of these businesses?
Well, they have decisions to make. Some of them, the larger companies, a Walmart, for example, has the buying power to tell its overseas suppliers that they have to absorb the cost of these tariffs. But that's the exception to the rule, I believe. Not every company has the buying power of a Walmart. And I don't know that Walmart can sustain that over time, but certainly in the near term, a large company like Walmart can probably tell many of its overseas suppliers that they're going to need to absorb these costs. For 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 many other businesses, they will either have to increase their prices to cover manufacturing costs, um, or look for alternative supply chains, um, preferably within the U.S. I don't think that's something that most businesses will be able to do in the near term, but over time, that may be a preferred solution to raising prices, is to tweak their supply chains to try to minimize the impact of the tariffs.
And that certainly seems like that's what the president is wanting to see from all of this. But how you kind of touched on it there. It sounds like there could be uh, some pain for consumers for a while.
Well, the supply chains have generally been in place for a while for many of these companies, and in many cases, there may not be readily available inputs. For example, if you're a manufacturer in the United States and part of your supply chain comes from overseas, it may come because it's cheaper to buy overseas, but it could also be that there's just not sufficient supply or any supply of a particular input for the United States. So, to the extent that you're going to seek to try to integrate your supply chain entirely or primarily within the United States, it's going to take time. It's not something that you can do overnight.
We keep hearing about the historic nature of this. You have a lot of experience in this area. Have you ever seen anything like this?
Not in my lifetime. The last time that the United States had this kind of a significant tariff increase was in the 20s under the Smoot-Hawley Act. And the president's tariffs are actually even larger than those. So no, certainly not in my lifetime. And I'd say nearly 100 years, we have not seen this significant a change in trade policy.
So where do things go from here, do you think?
Well, I believe that the president is going to pay close attention to how American businesses are responding? How is this impacting them? Um, I think at some point, if it seems to be working for his objectives, and I think it's worth touching on what the president is hoping to achieve with this. One is he wants, to the extent possible, if you're selling in the United States, he wants you to make the products you're selling in the United States. So if he sees a trend toward that, I think he's going to stick to his guns. If he sees that this is detrimental to the economy over a sustained period, he's probably going to receive a lot of pressure to, if not reconsider, at least pull back a bit. Certainly on critical inputs to continue to maintain manufacturing. I think we have to wait and see what kind of reaction countries give. If there's a retaliatory response where other countries are increasing their tariffs on U.S. goods, that'll certainly have an adverse impact and could very well also cause the U.S. government to evaluate if they should stay on the track. But I'd say in the near term, I would not expect any big changes. We're probably talking over the next 6 to 12 months that before the president reconsiders, if at all.
The president has vowed a couple of things to reduce the reliance on foreign goods, but he has also pledged to lower prices on things. Are both of those objectives possible at the same time when we're seeing this tariff policy?
Well, Garrett, as I mentioned, a lot of U.S. manufacturing is reliant on an international supply chain. That is to say that in order to build or manufacture the goods that they make, they rely, at least in part, on products that come from overseas. If those products have a tariff imposed on them, they're going to increase the cost of production and ultimately the in cost of their final product. So I'd say in the near term and medium term, that's going to be hard to achieve. It's certainly in the manufacturing side. Perhaps over time, if the president's objective is met by bringing more manufacturing back to the United States, it could potentially bring prices down, but that's not a guarantee. Labor costs here and other related costs are such that it's not certain that bringing manufacturing here across sectors would necessarily bring prices down.